Welcome to this webinar organized by the Inter-American Development Bank. We're going to talk about sustainable finance and the ways in which the private sector and the public sector and multilateral organizations can work together to develop this area further across the whole of Latin America and the Caribbean. My name is Silvia Pavoni. I am a journalist with the Financial Times Group, and I edit Sustainable Views, which is a new platform. It's a prototype platform that looks specifically at policy and regulation in this space. So we follow very closely and very keenly all the developments taking place in Europe, in the UK, but also across the world when it comes to rules, frameworks, and again, policy and regulation that is reshaping the way that we look, analyze, and channel capital. So we're going to start with some welcome remarks from Eduardo de la Maggiora, who is CEO and founder of Betterfly. And Eduardo is leading a company that is an insurance tech startup, and they're very proud to say that they enable, they reward good habits with social causes. So it's a startup that has reported a $1 billion valuation after the latest funding round, which made it Chile's new unicorn. Quite an achievement. Welcome, Eduardo.
Thank you, Silvia. Today, I'd like to tell you a story. I'd like to start going back to when I was 10 years old. When I was 10, and this was my own initiative, but also my family's, I started to play tennis, and tennis became a passion for me. When I was about 15 or 16 years old, I started thinking about maybe becoming a professional tennis player. I can't tell you the whole story today, but tennis was everything I thought about from morning to evening. And it became a passion, an obsession, actually. And back then, in order to become a professional tennis player, I had to convince my parents that that was a good idea. And then all of a sudden, something happened that turned my life around completely and was the beginning of what Betterfly is all about, the company that I built 20 years later. My father was in an accident, and he was left in a critical situation and fighting for his life, and then died. And he had no life insurance. So not only did I lose the person that I love the most in my life, but our life just changed overnight. And up until then, my only concern was playing tennis, and then things changed overnight. And that's what is faced by many families in Latin America and the Caribbean. 1 out of 13 children in the region lose their breadwinner. And once they do that, about 90% of them have no coverage, there's no life insurance, so that they can continue to support the family with the same standard of living. So that's what I experienced in the flesh. I had to put my rackets in the closet, my tennis rackets, and I went to school. I became an engineer, and then I went into the financial services industry and worked for JP Morgan for 10 years. But life had more in store for me. So faced with several issues, I was once again in a situation where my mom was in trouble. I was at the peak of my professional career. I was 34 years old, and my mom was diagnosed with leukemia, very aggressive leukemia. And that just, my life ground to a halt. And I thought, things can change in a heartbeat. So I started wondering and asking myself, Eduardo, what if, you get run over when you're crossing the street tomorrow? How would I measure my life, based on my professional success, my grades in school, the amount of money I have in the bank? And so I started thinking about how I would assess my life if I knew I had 1 month to live, and that life was going to be over in a matter of a month. And I concluded that one good way to assess my life was assessing how I was using my ability to think and to create and everything that was given to me by God to help others. And I couldn't really answer that question. So to make a long story short, I went to my boss at JP Morgan and I said, Nacho, I'm leaving the bank. And he said, where are you going? Where are you going, to Goldman Sachs or Morgan Stanley or where? And I said, no, I'm going to Africa. What do you mean Africa? What will you do in Africa? And I said, I want to spend 6 months of my time and energy from sunrise to sunset to changing people's lives, making a difference, and then I'll go back to normal, quote unquote. And I wanted to just go somewhere completely different from what I was used to, Chile and the United States, where I had spent most of my life, and being exposed to a place where there was a great deal of economic and social vulnerability, and work as a volunteer in Tanzania, in the north of Tanzania, with children between the ages of 3 and 7, and then go back. And once again, going back to this story, first of all, I experienced child malnutrition firsthand. These were children who did not get enough food to grow, and that goes back to what we do at Betterfly. But that was one issue that really hit me. I had never experienced that before. I did not know what the magnitude of the problem was. I had read about it. And then secondly, sports. In Africa, I ran into the Iron Man video from Hawaii, and I saw the video and I said, wow, how can people do this even? And are they nuts? And I thought I was an overworked banker at the time. I was 20 pounds heavier. I did not play sports. Tennis was back in my past. But then I started wondering what happened to my passion for sports and the healthy life that I used to lead. And then all of a sudden it dawned on me that I wanted to go back to playing sports when I went back home to Chile. And that happened in 2015. I started training. I started eating healthier and started losing weight. And all of a sudden I thought, these kilos that I'm losing in weight, how about I turn them into food for children in Africa? How about the calories that I'm burning through sports can be turned into calories to feed children in Africa and have an impact on others around the world through things that I do myself in my life? So quite simply, the calories that I burn through sports, how about I recycle them into food? So calories for calories. So this social DNA was what led to the building of a company geared towards helping by helping ourselves. So based on that, we also developed this platform to recycle calories and work from the individual to the community. And after working in financial services for so long, I realized that health or life insurance actually is the least tangible product that you have. You will never get to use it. It's your dependents who are going to use it. So it's very intangible by nature. After working for JP Morgan in the life insurance department for so long, I thought, this is a product that has to do with your life, although you're insuring people in the event of death, right? But it's about people being happy, living a longer life, listening to music and doing healthy things. How about we had life insurance that you can develop and build with your hands and feet instead of just money, and so that you can protect your family through financial services for life insurance. And this is so much more important and meaningful than Netflix or Spotify, etc. So I decided that we should empower people to live differently. At Betterfly, we call it the power to help others by helping yourself. And this, we always hand over a magic wand to people, and we say, through Betterfly, you will be able to protect your families, the environment, your communities, simply by leading a better, healthier life. And so we're, through technology, empowering people to do better through life insurance that is not costly, and also protect others and their communities through everything that you create by taking a walk, listening to music, saving money, reading a book or doing something that's good for you physically, mentally, or financially. The company was created in 2018 and we launched Betterfly in 2020 in the midst of the pandemic. And over the last year, it's been a roller coaster of growth and impact. And the truth is that that's even an understatement. We've created a company with that is with a presence in 17 countries in the region, and we're the first social unicorn in Latin America, and we have over 600 employees. And one thing that is unique to us, the secret sauce, so to speak, what we're doing and building is by creating a company that is based on social purpose, on people's purpose to build a strategy, products, partnerships, and to pick investors and attract them. And we're using it as a guide to build a one-of-a-kind company, never to be seen anywhere else in the world, and something that 4 years ago seemed just like a pipe dream, being able to bring democracy and empowerment to life insurance as part of a solution that at the end of the day will help people lead a better life. In closing, let me just tell you that this has been a wild ride. I started doing sports again at 35. I had never done a triathlon, and I was able to conclude the Ironman, and I became vice champion of the world in my category. And I thought, and that began with just the question: how would I assess my life if this were the last day of my life? And this is such a simple question that just helps us appreciate the fragility of life and how thankful we have to be for what we have in life. So that's the story behind Betterfly, how we started off and how we've grown. And it's such a pleasure to be here with you. And hopefully we'll be able to meet in person now that we are going back to this new normal.
Well, thank you so much, Eduardo, for your introductory remarks. And now we can start our panel discussion. So clearly, sustainability is a very important subject for the whole world, not just Latin America. But now it will be interesting to find out what our panelists think are the key challenges, but also the more interesting and most interesting opportunities for the region when it comes to sustainability. So let me first introduce you to our panelists. We have Ricardo Cuesta, who is the Executive President of Produbanco in Ecuador. We then also have Alexa Blaine, who is Managing Partner of Dicton Impact and Investment Committee member at CABEF, and also at HREFF Funds, and I hope I pronounced it correctly. We then also have Martin Naur, who is founder and CEO of Bankingly in Uruguay. And last but certainly not least, we have Claudia Goldmeyer, Managing Director and Senior Global Portfolio Manager at Colchester Global Investors. So thank you all for joining. And thank you for joining from different parts of the world as well. As I said, Latin America is, of course, a region that is looking at sustainability and at the way in which environmental, social, and governance principles are reshaping the way that we look at finance and the way that we define capital. And I just would like to start by asking all of you where you see the biggest challenges in developing this concept of sustainable finance and applying those ESG principles to financial services, and where also you see the opportunities. Shall I start with Ricardo? I'll go straight to you.
Thank you very much, Sylvia, and also welcome to all the other panelists in presence. I'm going to switch to Spanish, and then I feel a little more comfortable with my mother language. La sostenibilidad ya no es
Sustainability is no longer just a concept that is aimed at the business community. There's an increasing awareness about the importance of the agenda on sustainability for the region. And this is really reflected in individual actions, opportunities for measures more collectively focused that can have a much more in-depth impact. Our challenge in the bank is to see exactly how can we help our clients in every segment in the business community to continue to follow up with the sustainability agenda without hindering their profitability or their sustainability goals. So without that, you have no business opportunities. So we don't share the same culture in Latin America as you do in Europe, where many banking customers are willing to reduce their interest earnings in exchange for improving the environmental objectives. That's why we need to better educate our communities. We need to raise a greater environmental awareness in our country. So that's why we have become real factors and catalysts for change. In Latin America, we have many shared concerns with regards to the impact from global warming and climate change. That's why we need to get more assistance in order to work more together in unison in dealing with climate change and global warming. One major impact in Latin America is that we still face many unresolved social challenges that could sometimes divert our efforts and our attentions from sustainable development objectives. Today, we still need to acknowledge that in the sustainability agenda, we focus still in the well-known SDG UN objectives. For example, improving well-being, health, education, quality education, SDG 3, and also reducing inequality, that's SDG 10. That's why by not having all of these issues already resolved, for the most part, these are still competing with the sustainability agenda goals and objectives. Thank you.
Thank you, Ricardo. So you mentioned something that hopefully we can also discuss later, which is the point you made about some investors happy to forgo returns or higher level of returns in exchange for positive environmental and social impact, because some proponents and great supporters of impact investing in this case would tell us all that actually one doesn't mean the other. So focusing on investments and companies that have a positive environmental and social impact wouldn't or shouldn't necessarily lead to lower returns. So perhaps something that we can discuss later. Keen to hear everyone else's views on this. Let's see, shall we go to Martin now and hear, Martin, your views on the stage in which sustainable finance and sustainability more generally is in Latin America and the Caribbean?
Absolutely, and thank you very much for having me in this panel. I think it's great and important to be discussing this so we can move forward. Clearly, the challenge is more obvious every day, but the solutions are not obvious, right? So I think a lot of collaboration between the public sector, the private sector, and the many phases and ways that private sector takes is critical to make progress. I would say, just as an introduction to leave it for further discussion, is one, there is a huge cultural change needed in all the players to make significant change. And the second is starting to see this as much as an opportunity as we typically talk about it as a challenge. And I would say if we can make those two very high-level changes, we can start having a different discussion and hopefully having more traction in the solutions needed.
Thank you, Martin. So definitely very important to change culture, also to define what culture is, right? Because often it is actually quite an elusive concept. So let's see whether we can tackle that as well. Let me now go to Alexa. What are your views, Alexa?
Thanks, Sylvia. No, I think Ricardo and Martin's comments were spot on, and it's something that we see in our own portfolio. We're an impact asset manager. We only invest in impact businesses. But we invest in small and medium-sized companies, and we often find that businesses that clearly have significant impact, both socially and environmentally, are not always aware of or communicating or managing the impacts that they have, in light of all their competing priorities. So when we look at an investment in a sustainable energy project, that sustainable energy sponsor considers themselves, we're just producing electricity. We're not an impact business. And yet they have very strong impacts potentially through their community engagement strategy related to gender, health, well-being, many, many different ways. And similarly, when we're investing in financial institutions, they may not realize what a powerful agent of change they can be through their impacts on, for example, women borrowers, or through the way that they manage their workplace. So certainly we're putting a lot of emphasis on education around sustainable development and working with our portfolio companies so they understand why impact investors are so interested in these metrics, what they need to know about them, how they can report them, and how they can better manage those impacts that they have on the environment and within their communities. And I mean, more broadly, I think another challenge that we've kind of started seeing in recent years is that increasingly the region of Latin America and the Caribbean, more countries are seen as sort of off the radar for development finance institutions and catalytic investors, although these countries still have, quite marked inequalities, both in terms of income or in terms of gender, still have meaningful development challenges, and are still seen as too risky by many private sector investors. And so the opportunity there is this innovation that we've had in terms of blended finance, which really allows us to fine-tune the risk profile that each investor is experiencing. And we recently did a capital raise for our ELU Women's Empowerment Fund. It's a gender lens investing fund for the Latin American Caribbean region. And we structured that as an impact bond with a very, what I'd call light first loss capital protection. So just light risk protection of about 10%. And just that was sufficient to bring on 20 private sector investors that hadn't participated in previous rounds without the first loss capital, right? And so just these kind of adjustments, they really allow us to kind of get more bang for our buck when it comes to using kind of the precious resource that is catalytic capital in the region.
Thank you, Sue. I hope you can also talk about blended finance later on, and the role, of course, that obviously the organizers, the Inter-American Development Bank and other multilateral financial institutions can play in this sense. Let's go to Claudia now.
Well, thanks, Sylvia, and thanks for everyone sharing their views. And I do agree with, the challenges that has been mentioned. So I might just be focusing more on the sort of opportunities, which I think the region can benefit from the increased global investor demand on green, social, and sustainable bonds. And we have seen that evidence in 2019, where actually the Latin region had issued almost 50 green bonds. And then we have seen that sort of cultural change or, change in need in 2020 and 2021 as the issuance turned more to social and sustainable bonds as the countries needed support for the pandemic. But then despite the pandemic, I think the opportunity there has been clear that the region had continued its sustainability journey, and they've responded with new instruments and frameworks. And so the most recent examples one can include or think of is the local currency issuances from Colombia, with its first green local denominated bond. Or most recently, just earlier this month, we have seen Chile come to the market with a first sustainability-linked sovereign bond. And what's interesting about it is the timing. It had successfully issued its SLB bond during the high market volatility, as the tragic events within the Ukraine and Russian crisis were just unfolding. So I think that demonstrates that, as we're seeing in the region or globally, economies starting to recover again, and pledges for green and sustainable recoveries are being implemented. And therefore, there should be plenty of opportunities for sustainable finance in the Latin region to grow. And I think the last benefit the region has is the IDB's Green Bond Transparency Platform, exactly to these data points which had been mentioned before. The free platform of the IDB and through the Green Bond Transparency Platform facilitates transparent, comparable, and measurable data for the use of proceeds, and this should provide decision useful information for investors, as well as reduce greenwashing as well. And I'll leave it there for the time being.
Thank you, Claudia. You rightly mentioned, of course, the terrible events unfolding in Ukraine following Russia's invasion of the country. And of course, this is putting a new light on ESG and our understanding of ESG, what it means, sustainability principles. So it's also a moment in which it's a moment to reflect on, I guess, on what these factors represent. So you all started talking about raising capital either on the back of green projects, but also looking more broadly at the sustainability of a company and of a sovereign as well. Claudia mentions Chile. Uruguay, of course, is also in the process of doing something similar. So let's start talking about then capital markets and structures and instruments that work around these ESG principles. So let me go to Ricardo, but all of you just feel free to comment on anything that Ricardo may say about this subject. And I'm going to Ricardo first, because of course Product Banco is itself an issuer of this kind of instruments. So keen to hear your thoughts on the process behind it, and whether you found that the market for Latin American, Caribbean issuers in this space is growing, perhaps how it is viewed by both local and international investors, and what you think may drive growth in the future.
Thank you. El mercado de bonos ambientales y sociales.
The environmental and social bond market in Latin America and the Caribbean really has still a long way, a lot of space to be able to keep growing. And we're seeing increasingly issuance by investors, in particular in the larger markets, with some development already moving in the direction of more bond issuance. And the more we see greater issuance of these bonds, all of the stakeholders are becoming more and more aware and more familiar with the impact of these types of instruments, and they begin to adopt them, include them even in their priorities and strategies. In fact, in the past, all kinds of bonds were issued, but bonds that were more linked to the senior debt, so that this helped to impact mainly the financial conditions. This is in the long term that would lead to improvement in interest rates. But for Product Banco, which has just embarked on this issuance of bonds that focus on social and environmental impacts, has become the first sustainable bond issued in Ecuador. And it's the first bond in the region that has clearly delineated goals linked to the interest rates. So the market's interests are moving quickly in terms of impactful funding. And I think in the near future, we can expect to see many more bonds that are linked to specific actions, such as clean water initiatives and trade and business concerns led by young people, or businesses headed by females, among many of the other SMEs in Latin America. As we know, these are about 60% of the trade and commercial activities in Latin American countries. Now, we are part of the America Group. We have the BAMPRO in Nicaragua, Produbanco in our country, and all the five banks are fully committed to sustainable economic development in the region. And I think this has pointed to working with strategic partners such as IDB and IDB Invest. Through them, we've been able to develop these kinds of instruments to lead to, in most countries that I've mentioned, this is a fledgling market for Ecuador. This is the first bond issuance of this kind. So bond issued, I mean, in the local market. So this enables us, and just to give you an example, it provides us for the issuers this new opportunity, at the same time increase the appetite of investors, potential investors that could take advantage of these kinds of instruments.
Thank you, Ricardo. So, so you found presumably that the local investors were quite receptive to this issuance, and would you think that many others will follow?
Es importante aclarar, Silvia, que
let me just clarify, Sylvia, that the buyers of these for initial bonds, they were the IDB. IDB Invest was the investor with the issuance of this local bank bond. So the capital market, especially in Ecuador, is very, very shallow. And so we need, well, by doing this, we are establishing a new milestone so that other investors will have an incentive and encourage other investors who might see this as an opportunity to purchase these financial instruments.
So using the IDB, the bid obviously help because as a buyer, it can then place these securities using leveraging its status in the market. But of course, as you say, this may help create interest or even locally for this kind of issuances. So I'm guessing that you're feeling hopeful that this will happen. Do you have any plans perhaps to come to the market even without the IDB?
En el mercado ecuatoriano,
probablemente in the Ecuadorian market, other banks might come in with other bonds, maybe not sustainable bonds, but in Costa Rica, we've seen the issuance of green bonds based on mortgage bonds. And in Ecuador, we are working as well as with other financial institutions in this direction. So once again, this is not so as sophisticated a market for those investors that want long-term investments that would be leveraged by a commercial bank issuance.
Alex, I'm going to come to you because we started talking more in detail about the role that multilateral institutions can play in helping issuers come to the market. So how do you view this role developing in the future, and how are investors looking at the region still with no suspicions perhaps, but still requiring quite a lot of help in terms of dealing with the risks that they perceive are associated with this kind of issues?
Yeah, I mean, I think definitely there's still a role for blended finance vehicles. Generally, what we're seeing is that our portfolio companies require flexible financing, and they need it to be combined with non-financial support. So traditional financing, no matter how much of it, is not going to get us where we need to be in terms of a clean energy transition or achieving other impact objectives. As I mentioned, we invest in small and medium-sized companies. So, if we focus on kind of clean energy projects, we invest in these projects in Central America and the Caribbean through 2 blended finance vehicles, both of which are supported by IDB Lab, the Caribbean Basin Sustainable Energy Fund, and the Honduras Renewable Energy Financing Facility. So we call them CABEF and HREF. And being able to come in with risk capital, be it equity financing or some kind of mezzanine capital, is a really critical part of the capital structure for getting these projects off the ground. For larger renewable energy projects, the financing is much more readily available, but it's still definitely not the case for small and medium-sized projects. And, you know, typically, we're one of very few, if not the only capital provider for these projects, especially those that are backed by smaller local sponsors who we're really looking to empower because they're going to be driving this transition going forward. And then, you know, beyond capital, incubation or advisory support is often needed to bring projects to an investment-ready state. And so with our funds, we do use technical assistance to incubate and accelerate projects that are not yet investment ready. And we also use that funding to engage with our portfolio companies to proactively drive impact, particularly related to gender. So, you know, the use of that kind of technical assistance funding can be, you know, supporting environmental impact studies or helping the sponsor to implement a kind of best-in-class environmental and social risk management framework so that they're financeable by international investors. We work with sponsors to bundle several small projects together so that they're large enough to attract financing, you know, that there's economies of scale there. And then we engage on impact management. And that can include, you know, specifically advancing gender initiatives within a company. So for a renewable energy company, that might be related to considering gender in their leadership or their governance, or, you know, thinking about gender when it comes to their community engagement strategy, which is really important. Yeah, so I mean, those are, I think in short, you know, we see it as really important that we have that kind of funding available to achieving our overall impact and financial objectives.
So presumably the role of multilateral institutions is going to only to grow in the future in this space, as investors need to get maybe more familiar with this type of risks and this type of instruments. What do you think? Or is it once investors again familiarize themselves with the market, specifically investors perhaps that are looking at this kind of issuances, maybe there isn't going to be any longer much of a need for this kind of blended finance tools? What do you think? Or is it something that will always be there?
Well, I mean, I think that's the kind of the nice feature of blended finance is that it's not just there or not there, that you can really scale it for the amount of risk that's present. And so, you know, for example, with the Honduras Renewable Energy Financing Facility, there's quite a large piece of first loss capital because we were investing in a country that had, you know, some significant challenges when it came to renewable energy development, which was Honduras. But if we were looking at a regional fund with a little bit more flexibility, I think the amount of first loss capital or other, you know, catalytic capital could be much less. Similarly with technical assistance, you know, I think it depends on the scale of business that you're engaging with. And, you know, I think we kind of know what works now, though. And, you know, as we scale into larger funds, I think the contribution can be less, but it still really helps to be taking those largest downside risks off the table, and also to know that the manager has the capacity to be very hands-on with the portfolio companies to bring the private sector to the table.
Thank you, Alexa. Let me go now to Martin. So Martin, let's talk a little bit about technology, because arguably technology can help to include broader parts of the population and more companies into the financial services network, which in and of itself arguably also fits within the concept of sustainability. So tell me a little bit about the way that you look at it and the way that in which technology can play a role as we look at sustainable finance.
Excellent, thank you. And tying it to Alexa's point before and even to Ricardo's intro to the topic, I would say, I mean, we have been the recipient of impact investing. And I would argue that it's always going to be there because you are always going to be moving the frontier. So that first loss of catalytic capital has to be, today is we started discussing about green bonds. Tomorrow is going to be about the next boundary we need to push, right? So the concept is going to be there. It might be focused on a different thing. But being the recipient, I can also say it's important to start catalyzing the industry around standard measures of impact, because I have 5 different requests for metrics from 5 different impact investors. So it's always on the recipient side, some order to the method would be great. And we should be working on that. But going on the innovation and sustainability, I think about it in 2 ways. One is in the part of the financial ecosystem we focus on, which is small and medium financial institutions, credit unions, cooperatives, cajas, sacos, all the different shapes and forms they take in different, we work in Latam, Africa, and we are now starting Southeast Asia. They take slightly different forms, but they end up looking fairly similar and taking care of a similar side of the population. I would say having a broad and diverse financial ecosystem is part of the sustainability too. I mean, these credit unions in the 3rd, 4th, 5th cities or in the middle of nowhere are part of the social fabric, and they play a role in keeping those ecosystems alive. So for us, part of our mission is enabling that financial ecosystem to stay diverse. And that is one, and it's part of our mission. And then we come to the pure innovation side. And one of the key game changers on this has been the cloud. The cloud enables both enormous savings in terms of energy, is to some numbers is the same application consumes 2% of what a traditionally on-premise run application. And so it's not a 10% more, it's 50 times less. So there is a real impact. But you would argue that that is kind of a technical achievement, and now the goalpost is going to keep moving. That's innovation per se. But then it's all the new stuff that it enables. It enables to bring first-class, world-class digital services to a lot more places, and then to also tailor them to the actual needs of these populations that typically have been underserved, not only because of economy, in many cases, just simply because of reach. You couldn't reach the population in a reasonable way to make some money in the process in the whole service chain. So I would argue that innovation and sustainability go hand in hand. Is you make the community more sustainable by enabling new financial services and ways of working, and you keep the financial ecosystem sustainable in the process, and hopefully you consume a lot less energy in the process.
Thank you, Martin. And you mentioned a couple of really interesting points that I also would like to bring up with Claudia. So the one of disclosures, it's all about data, isn't it? And the way that companies disclose data, but the way also that investors look at this data to decide on their investment decisions, of course. So Claudia, let me come to you. You've been looking at climate finance, and transparency, of course, is important when you look to invest directly in the equity of a company, when you want to buy its debt, if you're a bank, when you want to finance a loan, perhaps, for that company. But yet when we look at disclosures, we really are all over the place. I think someone has mentioned, has used the same term before. So I'm based in London, in Europe, and the EU actually, so not quite the UK, although the UK is also catching up. It has been quite prolific in the way in which it looks at ESG, and the way in which it is asking companies, but also investors, to disclose and label their activity. So from your position, how do you look at the issue of transparency, and how much of a gap there is? I'm presuming you're going to tell me a big one, from where we are and where ideally we should be.
Yeah, I mean, you really hit the nail on the head. You know, investors or institutional investors in particular are concerned about investing in something that is not what it claims to be. And therefore, we are wanting to have much more clarity and detailed information on what the sustainability indicators are. And the issues, which you hinted on as well, as we are concerned about, is the sort of the green sustainability washing. And also, as you rightly point out, the lack of standardized frameworks we've got. And of course, then that brings us to the lack of transparency around the sustainability data. So the question is, what are the solutions for that? And, two parts of that. Some of them have already taken shape here. You mentioned the EU, they've obviously developed taxonomy and have really, in the forefront of pushing sustainable investing further with that sustainable finance disclosure regulations, the SFDR. And then, as you also mentioned, there have been some of them, other countries have been, following sort of the same path in terms of developing their own taxonomies. And why am I going on about taxonomy? Because taxonomy, the alignment is actually quite important because it helps investors to gain better transparency. It allows a measurability and comparability, and hopefully, reduces green or social washing. And ideally, over time, we're going to get a more harmonized, global taxonomy. And I think what Alexa was also pointing out earlier, and I think Martin too, was on that we do need more transparent data. As investors, we don't have to make then assumptions about the underlying data. So it's also part of the impact reporting, and that provides investors and other stakeholders with the clear evidence where their provided capital has actually reached intended green or social or sustainable project. And this in turn again would help us investors to reduce the risk of green or sustainable washing. And then as an investor, of course, that's one thing, but how do you get to the data? If we're talking about on the green, social, and sustainable bonds, we need to, which are obviously impact reporting, is a feature of these bonds and is becoming increasingly valuable for us and other stakeholders. But that exercise is extremely time and resource intensive, as we need to go through, for example, what are the loans, what are the various project level data, and then rolling it up to portfolio level data. So that can actually cause barriers for smaller investors. And even that's why we've actually enjoyed very much having the Green Bond Transparency Platform, because this is actually providing a standardized and downloadable data in Excel. On top of it, it's free of charge, and it can actually help attract more capital by reducing those burdens on investor. And ideally, what we see on top of more transparency as an investor is if we could get annual third-party verification reports as well. And lastly, I think what I would like to point out is the Green Bond Transparency Platform is actually a win-win opportunity for both issuers and investors. Simply as for investors, it helps them in their due diligence procedures, but also for issuers which provide the data to the Green Bond Transparency Platform. It increases their governance standards and thereby helps them, hopefully eventually, to reduce the funding costs over time.
Thank you, Claudia. And I'm sure you all are keeping an eye on what other jurisdictions are doing. Of course, there's some markets across Latin America and the Caribbean who are also looking at taxonomies and of course, frameworks. Not to mention the work of the accounting standard setters, IFRS, the creation of the International Sustainability Standard Board. So there is quite a lot of movement in this space, and hopefully alignment and harmonization when it comes to reporting frameworks, and at some point, hopefully, also when it comes to data. So as the last couple of questions, we still have a few minutes. I just wanted to do another round around the virtual roundtable, and just ask you how you're feeling about the way in which, again, the region is looking at all these developments, and the way in which hopefully the growth of sustainable finance may also help the economic growth of the region. Shall I go to Ricardo first?
Thank you again. Yo creo que el gran reto.
Well, I think that the big challenge going forward, particularly for Central America and South America, can probably be seen as two challenges. One is actually bringing our communities into the banking system, and also gender equity and how that's addressed. I believe that innovative and simple and accessible finance solutions that can be used through more access to internet and through more mobile devices, that can increase access to the banking system, to bank accounts and to loans, but they focus on the bottom part of the pyramid. I believe that government in Latin America has a role to play, and we believe that it should focus on providing the basic technology infrastructure that allows communities to more easily connect to the internet. That can help increase more financial literacy, more digital literacy, create more innovation in schools and universities. And when it comes to the private sector, and specifically the private financial sector, is still firmly committed to innovation when it comes to digital and sustainable financial solutions that can allow for that mass access for communities and to provide more digital and finance literacy, as I mentioned before, starting earlier in life with younger children, in order to then also reach other generations throughout the countries. The private sector is a catalyst and a change driver. We heard that during the COP, in the Race to Zero campaign, and this had to do with the Net Zero Banking Alliance commitment. The global banking sector is taking major steps to push their clients in that direction. And this is a very broad and a very important issue, because we're no longer talking about banks or businesses and corporates making commitments to net zero or to zero carbon. It's actually looking at the different credit portfolios in commercial banks. That is where the alignment is happening for 2030 and for 2050. And that is how we actually get to zero carbon. And I do believe that that is the biggest challenge going forward. The financial industry's role will be to foster and to encourage real sectors offering products and services to help with that transition to shift towards a low carbon emissions economy. Latin America needs more investing. We've already said that. It needs more support. And that is because since there are no additional funds for these kinds of investment, it is going to take more to keep up in this race over time to also support what is coming.
Thank you, Ricardo. Martin, I'll come to you. Ricardo mentioned the role of education as well, and arguably in that sense also inclusion in economic activity, which down the line would mean financial inclusion.
Yeah, and we hear a lot about people that hasn't been included before. They don't know how to use. One of the reasons is they don't know how to use the tools and stuff like that. In general, what we believe is nobody teaches a grandmother that wants to see a granddaughter how to use WhatsApp, or if you have a family outside your city, how to use Facebook. People manage to find a way. So if you provide, one of the things we focus a lot on is provide the most relevant, timely, cost-efficient service, and people will find a way of learning. You can obviously do some efforts to make that a community effort and find ways of sharing that knowledge. But I would say a lot of the innovation, at least we focus on in providing the right service, and the rest is easier to find. One of the things that for us is tied to the signals we get from the public sector is regulation, right? And regulation is still very much focused on the past, on the way things used to be done. For example, there are, and BID does an event that for me was the first experience. They do an event where they put together regulators and the fintech associations of every country. And we discussed together how to move this forward. There are some simple things, like, for example, experimenting in a financial institution is terribly penalized by the regulation. Is you need to do 27 million forms, present them, defend them, wait, and maybe you are allowed to run the experiment. When you are just not running much more risk, you are not changing the critical risk side of the equation. It's just you might be changing the delivery side of the equation, for example. But the regulator focuses on what is the contract you have with the fintech that is helping you? What is the condition and stuff that is just the detail and on the. So I would say, going back to my initial comment about culture, I think the whole ecosystem that is working on these topics needs to change the focus to this is happening, this is good, let's make sure it happens in the best possible way and for the largest amount of people possible. I would say for me, that is the way we try to think and work with the ecosystem on that.
Thank you, Martin. So Alexa, Martin mentions a regulation, obviously, from the perspective of a new company looking at growing its business, but regulation also plays a role specifically when we talk about sustainable finance. So is that going to make a difference, do you think, across Latin America? And how do you view the growth of sustainable capital markets, more broadly sustainable finance across the region?
Yeah, I mean, I think the regulatory environment for renewable energy has improved a lot. I mean, many governments in the regions where we work have committed to substantial increases in their renewable energy capacity. I think there's still a lot of bottlenecks, though, that are created through the development process, and particularly for small developers, those can be very difficult to navigate. They can get bogged down in permitting processes, and certainly that's what we saw through the pandemic. Was many projects were very delayed and had trouble, then ran into some liquidity challenges and had trouble getting back on their footing. Yeah, I mean, I think we continue to need to support our portfolio companies through those challenging processes. And I mean, we sometimes joke that we're a development company in disguise, because although we actually provide financing at the construction ready stage, we spend so much time with sponsors and with prospective investees before that moment, so that they are ready to take on the investment, right? And I think that's really what is needed. And what we like about doing it this way is that you're then empowering that sponsor to go on and do the next project, having really been through the process of bringing a project to commercial operations. They're then much better able to navigate that going forward. And so, we really want to see more local sponsors empowered to grow their businesses, right? And so I think that's the advantage of kind of channeling capital towards smaller opportunities as opposed to just larger ones. Yeah.
Thank you. So it's a good, I guess, hope to have smaller operators feeling empowered to tap this market. Claudio, last words, how are you looking at sustainable finance across Latin America and the Caribbean? What would help develop it, and also to link the growth of sustainable finance with the overall growth of the economy?
Yeah, I think it comes back to what Alexa was saying as well. If you look at the fixed income side, I think development banks do need to play a bigger role going forward. They have already helped, in particular, attracting private capital as well. So they have the benefit of obviously financing themselves at more favorable conditions as they've got government backing and higher credit. And then they can use that by being an anchor or a corner investor, and therefore reduce the perceived risk for private investors. Providing guarantees, in particular, is helpful for emerging markets when we talk about infrastructure projects, as that's perceived as high risk, but also on the sovereign side. So, for example, Ecuador received a guarantee from the Inter-American Development Bank in 2021 for the first sovereign social bond, as well as then we're seeing other, development banks, such as the German development bank KfW, which has launched the LAC Green Fund to really develop the green bond market in the region, and is even providing initial first loss on the capital. So I think that's what we need, technical assistance similar to the private sector, again, in particular for smaller nations, and again, more innovative products, as one size doesn't fit all. So that's what we have seen. For example, green bonds don't fit smaller nations. If they have not enough underlying projects, there may be more sustainability-linked bonds might be more applicable for them. Then it comes down to helping them in developing more challenging KPIs. Is it like we have seen in the case of the Chilean issuance recently, more transparent and interesting NDC linkages to KPIs? And I think, helping them on the development of local capital market infrastructure, one important step has been provided by the Green Bond Transparency Platform, and that hopefully we can, even roll this out more globally, and that should help to support or, close the funding gap to facilitate more the transition to lower carbon economies.
Thank you so much, Claudia. So we've come to the end of our panel. Clearly, the financial services sector can play a big role in developing and incorporating environmental, social, and governance principles within the economic fiber of many countries, if not the whole of the Latin American and Caribbean region. A lot of work is still ahead of all of us. Banks, investors, regulators, accounting standard setters, data providers, and of course also the multilateral organizations. So still quite a lot to do, but it's an exciting field, and I hope that everyone watching also is feeling energized about looking and trying to present new solutions to solve all the many problems that are in front of us from an environmental perspective, from a social perspective, so that we can move to a greener and more just economy. Thank you to all the panelists for having shared their thoughts and their time with us, Ricardo, Martin, Alexa, and Claudia, and thank you everyone for having watched and listened to our discussion. So now we are going to move on to the next session. We're going to hear some closing remarks from James Scriven, who is the CEO of IDB Invest, and Irene Arias, the CEO of IDB Lab. The floor is yours.
Thank you, Silvia, y muchas gracias por acompañarnos en este seminario. And thank you very much for joining us for this seminar. It is a true pleasure to share with all of you. Based on the analysis we heard during the panel, there's a first conclusion to highlight. In order to achieve sustainable and inclusive recovery, which is what the countries need, the private sector of Latin America and the Caribbean needs to multiply its financial resources. After the last 2 years, it's become clear that public resources have been strained to unprecedented levels due to the pandemic. Therefore, the growth of challenge very much involves the private sector and its ability to offer more and better financing options. In other words, the best return on investment is to increase financial innovation by encouraging the private sector for it to increase its role as a catalyst. And a second conclusion is the confirmation that there is a mismatch between the growing appetite for impact investment in emerging markets and the lack of bankable projects with the right risk profile. In the region we work for, there is significant unsatisfied impact investment demand in the private sector of all of Latin America. So economic recovery, as we see, presents a unique opportunity for this private sector to take a greater role and drive growth with a focus on meeting the United Nations Sustainable Development Goals and in pursuance of the climate agenda of the Paris Agreement. We are therefore in favor of strong recovery, which can only be driven by a sustainable, dynamic, and inclusive private sector that acts in coordination with public policy. The IDB Group is called upon to be a key actor in this context. IDB Invest and IDB Lab, both of them devoted to work with the private sector in its different stages of maturity and growth, offer a value proposition that can meet the financing needs of the region, is adapted to the risk appetite of investors, and geared to the needs of our clients. On this path, coordination with the public sector is essential in order to create a continuum of support between the public and private sectors. Public sector intervention enables the development of regulatory frameworks to foster growth, increase business formalization, drive innovation, foster transparency and the rule of law, in addition to putting in place the right incentives that must contribute to attracting private capital towards a region. The mobilization of resources in order to connect institutional investors with the development assets of Latin America and the Caribbean is key. Also, financial innovation is a fundamental factor to reduce growth and attract new investors and sustainable finance, and also to develop solutions that can measure and implement social and environmental impact. Both aspects are key to IDB Invest, which seeks to establish itself as the main channel for sustainable investment towards Latin America and the Caribbean, betting on a portfolio of development assets designed to have a positive impact in our countries. And IDB Lab and IDB Invest offer a continuum of financing for the private sector, supporting innovation, as James said, all the way from the early stages up to the scaling phase. And in this regard, IDB Lab intends to become the innovation hub for Latin America and the Caribbean by mobilizing and supporting venture capital in the region and promoting the adoption of emerging technologies so as to accelerate inclusion through the creation of quality jobs, also fostering scale transformation and empowering poor and vulnerable populations, in addition to developing high-impact innovations, apart from the right ecosystems for such innovation to multiply and thrive. Latin America and the Caribbean have industries with vast potential, a population seeking higher quality of products and services, and growth prospects that can attract international investment. In the specific case of the venture capital industry, which IDB Lab focuses on, a key point is innovation, and market data augur a promising future. IDB Invest and IDB Lab, we can conclude, have the purpose of working together with the private sector in the region for innovation and greater impact. The need to enhance private participation in financing sustainable growth is urgent. The context suggests that businesses and entrepreneurs want to be a part of a solution and that the interest among investors, both national and international, continues to increase. The mobilization of resources enables us to channel capital in order to meet the specific investment needs by industry, by country, and also to identify sectors with the greatest growth gaps. And in this way, we can create new horizons, new investment opportunities, and move forward in sustainable and inclusive growth for our region's countries. Thank you very much. Thank you very much to you, Sylvia.
Thank you, James and Irene, for sharing those final remarks. Thank you again, everyone, for having stayed with us, for having listened to our seminar. I very much hope that you found it interesting and useful. Of course, much more is needed, much more work is needed when it comes to sustainable finance in Latin America and the Caribbean. And of course, this is true for many other parts, if not the whole of the world, really. And I very much hope that this has helped a little bit in terms of providing a few ideas, some inspiration, perhaps, but also encouragement towards looking at this area. So thank you again, everyone. The webinar, I also would like to let you know, is going to be available on the IDB website. And of course, feel free to revisit it and even to share it with your colleagues or your work contacts. Again, thank you very much, and see you soon.